Welcome to The Explainer. Today, we're going to learn how to decode the secret language of the financial markets. And here's a hint, it has nothing to do with news pundits or those talking heads on TV. We're going to learn how to read the story the market is telling us right from the charts themselves.
Now, this quote right here from a pro trader, it kind of throws a wrench in what most of us are taught, right? The idea that you should ignore the news? It's pretty wild. But what it's really saying is that everything you need to know, all the fear, all the greed, the real impact of some big announcement, it's already baked right into the price on the chart.
So if you're not listening to the news, what are you doing? Well, the answer is something called price action trading. And really, it's just a method that's all about focusing on the raw movement of price. It's like learning to read the market's mind by watching what it does, not listening to what people say about it.
All right, let's get into it. Section 1, trading what you see. And this right here is the absolute bedrock principle. It's what makes price action trading so different from pretty much everything else out there.
Okay, so what does that actually mean? It means you're reacting to what the market is doing. Like right now on your screen. You're not trading what some guy on TV says it should be doing. You're not trading what some big economic report says it might do in the future. You are trading reality, not the forecast. It's a huge shift in perspective.
So if we're going to read the market's story, we have to start with the basics. We have to learn its alphabet. And you know what that is? It's candlesticks. Each and every one of these little bars tells a whole story.
Yeah, seriously, think of every single candlestick as its own little drama playing out. It shows you 4 crucial pieces of information for whatever time period you're looking at: where the price opened, the absolute highest point it hit, the lowest it dropped, and where it finally closed. It's a perfect snapshot of that tug-of-war between buyers and sellers.
And the color? That's the headline. It tells you who won. If it's green, the buyers, we call them the bulls, they won that round. They pushed the price up. If it's red, well, the sellers, or the bears, they were in charge, and they pushed the price down. Super simple, right?
But here's where it gets really juicy. The real story is in those little lines sticking out the top and bottom. We call them wicks or shadows. They show you the struggle that happened during the battle. A long wick on the bottom means sellers tried to tank the price, but bam, the buyers came roaring back. And a long wick on the top? Totally opposite story. The buyers got ahead of themselves and the sellers just slapped them right back down. Okay, so we've learned the alphabet. Now let's start putting those letters together to form words and sentences. This is where we zoom out and the bigger picture really starts to take shape.
See, when you line up all these candlesticks, you'll notice they don't just move around randomly. They tend to form one of 3 basic trends. An uptrend, well, it's kind of like walking up a set of stairs. A downtrend is like walking down them. And a sideways trend? That's like you're stuck in a hallway, just bouncing from wall to wall.
And inside those trends, you'll find these really important price levels. We call them support and resistance. Think of support as a price floor, where buyers just seem to show up and start buying. And resistance is the ceiling, where sellers come out and start selling. You might be wondering, why do these happen? It's all about market psychology. These are just spots where a ton of people made a decision in the past, and it creates this sort of memory in the market.
And this is so cool. It really shows you how the market has a memory. Once a price level, let's say a floor, gets broken, it very often turns into the new ceiling. This idea of role reversal is absolutely fundamental for price action traders. It's one of the key ways they try to figure out what the market might do next.
All right, so we've got our map, we've got our landmarks like support and resistance. Now we can start looking for common patterns. Think of them like shapes you see in the clouds that give us clues about what might happen next.
Here's a classic one, the double top. It's basically a story about buyers getting tired. You see the price go up and hit a ceiling, it gets rejected. Then, the buyers give it one more shot. They try to push it up again, but they fail at that same spot. That second failure, that's a huge red flag that the buyers are out of steam and the sellers are about to take control.
And you know, sometimes a single candlestick can tell an incredibly powerful story all by itself. Take the hammer pattern. It literally looks like it's hammering out a bottom for the price, showing that buyers strongly rejected any attempt to go lower. And its polar opposite is the shooting star. It looks like a star falling from its peak, signaling that sellers rejected higher prices. Traders are always on the lookout for these, especially at those key support and resistance levels we talked about.
Okay, so knowing how to read the charts is one thing. It's a skill, for sure. But actually making money from it, that takes something else entirely. It takes a certain kind of mindset, one that's all about probability and discipline.
not trying to predict the future.
And this equation right here, this is the simple, brutal math at the heart of trading. Look, it's not about being right every single time. No one is. It's about making sure that when you are right, your wins are way bigger than your losses when you're wrong. A pro trader won't even think about clicking the button unless the potential reward is worth the risk they're taking.
And honestly, this is what separates the pros from the amateurs. If you listen to any seasoned trader, they'll tell you it's not about some secret magic pattern. It all comes down to relentless discipline, sticking to your rules no matter what. It's about having the patience to sit on your hands and wait for a really great setup instead of chasing every little move. And maybe most important of all, it's about mastering your own emotions so fear and greed don't wreck your whole strategy.
So at the end of the day, what price action really teaches us is that a chart is just a picture of human psychology. It's a map of fear and greed. And yeah, the patterns are there for anybody to see, but being able to read them and, more importantly, act on them with discipline, that's the real test. The market leaves clues everywhere, but the real question is, do you have the discipline to actually read them?